Hi everyone, welcome to Tuesday. I hope you've had a lovely weekend. Hey, before I talk about the New Zealand Stock Exchange, I just want to remind you, coming up next Tuesday on the 25th, we are doing part 2 of our Learning to Invest series. And this one is actually talking about investment strategies. With this course, you will find out the different options that are available for investing and which one is going to most suit your asset allocation. We will also talk about managed funds in this particular series. Link is below if you want to join. I'd love to see you there. Right, obviously, naturally on a Tuesday, we do talk about the performance of the main board, being the NZSX 50. Just before I jump across and share my screen, remember that this is for educational purposes only, definitely not intended to be personalised financial advice. If you're looking for that, then you do need to go and have a chat to your own financial advisor. Let's take a look at the New Zealand market. Right, you can see here I've got the NZSX 50 gross index up on the screen. And last week, you can see there we did have a little red candle, meaning that the markets were down for last week. Now, I'm not too concerned about this. You can see that little dashed line there. Obviously, only time will tell, but that potentially could be a form of support. So in other words, that's where a share will go above it and come back down to that level and hopefully rally on again. That is what a line of support is. If that continues to do that, staying and hitting that line and going up again, that is actually a positive sign. If the market falls below that level, then obviously it's not a line of support. It could potentially mean other things are going to happen in the winds. But again, only time will tell. And I'm not into preempting the markets or anything like that. I'm just purely looking at what the charts are telling us. So at this stage, I have put on hold any new investments into anything in the New Zealand share market, but we'll just have to wait and see. Also, bearing in mind, globally, things are under a little bit of pressure. We've seen a fair bit of sell-off in the last couple of weeks with both the US markets and the Australians. We do tend to follow a little bit, although they've been having great runs this year. We've certainly not seen that in our market. Our market has been trickling along, but it certainly hasn't been doing anything stellar, unlike those two potential markets. The volatility's come off in our market. You can see there by that ATR. So we've got 242, 0.24, and we'll divide that by the value of 13,479.69. Pop that into a percentage, and we're looking at about 1.8% volatility. So very, very low, which is a good thing. Now let's just have a look on the 1 year chart and just see what that potentially is telling us. And you can see here, if I zoom in, most of last week was a negative week with the exception of Wednesday. You can see that there by that little green candle. That was the only positive day last week. I am recording this on Monday morning and the market is open, and that's why you can see a little green candle appearing there. Like I say, nothing too untoward, but we do need to keep an eye on, just see what's going to happen. Might be a line of support, which would be great. We'll just play this by ear. Let's put on our moving averages and just see what that is showing us. So let's first of all use our 30 exponential. And you can see that the market has come right back to that 30 exponential moving average. It is pretty much sitting on it. Let's also look at the 15 period and see what that's showing. You can see here that the market at the moment is trading a little bit below that 15-week moving average. Could potentially be on a little bit of a crest. If that is the case, then we definitely want to stay out of the market. I don't like buying into anything where the share itself is trading below those moving averages, whether it's on a daily or a weekly chart. To me, that is something that we want to keep out of. And that too is why I'm just sitting on the fence. Let's go back to the 5 year chart and just see what that's showing us. So the 5 year chart, being obviously weekly intervals here with the candles, that's still okay. The index is trading above both of those. Again, nothing to get concerned about. For me, I always do my positions based on a weekly chart. However, I do look at dailies just for confirmation, simply because a daily chart, things are happening just that little bit quicker than what's happening on the weekly. And so I'll use that as a confirmation. But other than that, I pretty much base everything on the weekly chart. So for me at the moment, it is just a wait and see. It is just sitting on the fence. If I look at this RSI down the bottom here, the only thing I'm really looking at is this pointing upwards or downwards. And on the weekly, it appears to be pointing upwards. If I just go back to that 1 year chart, again, it's pointing upwards on the 1 year. So again, that's great. That's good positive signs. And like I've said before, nothing can keep going up forever. Everything has to take what I refer to as a breath in. That could be what we're seeing here with the New Zealand market, but only time will certainly tell us on that. So, like I said, nothing too exciting to share there at the moment. This week, I have done a video on Live for Thursday's share and review. It is a healthcare sector. It is based on the BlackRock healthcare sector, which invests into existing and emerging healthcare sectors. It's been a pretty strong performer. So keen to see what you think about that on Thursday. But just remember, if there is a share that you would like me to review, or if you've got any questions regarding the share market, by all means, sing out. I'm happy to do so. Happy to help you on your share market education journey. Take care.